Hi everyone, and thank you for joining us for today's webinar on the Green Bond Market and Climate Bonds Low Carbon Buildings Criteria, a briefing for policymakers and building sector stakeholders. I'm Katie House, and here with me today are Corey Nestor and Carmen Mack to talk you through this webinar. But before we begin, I would like to first go over some basic housekeeping. This webinar is scheduled for 1 hour. The presentation will take 45 minutes and then we'll open for questions. We'll have a dedicated Q&A session at the end of the presentation. You can submit questions at any point during the webinar by using the Q&A panel at the top right-hand corner in the webinar platform. All attendees of this webinar are muted, so questions can only be accepted written in the Q&A panel. This webinar is being recorded and will be made available to participants and on our YouTube channel shortly after. Now, I'll hand over to Corey to kick us off.
Hello, everyone. For today's webinar, this will be a follow-up from last Tuesday's webinar that was more of the high-level look at the buildings criteria as well as the green bond market. This one will be specifically on sort of a brief overview of the green bonds market, and then diving directly into the details of the buildings criteria. So it will be a technical review. So all the verifiers and other people that are interested in the behind the scenes, this is a really good webinar for you to get to know the standard as well. Following that, there'll be a discussion on the certification process and any questions there are about the certification process. Please feel free to write them in the Q&A section, and then hopefully we'll get to everyone's questions at the end. But yeah, definitely feel free to dive into any of the technical challenges that you see or maybe experiencing if you already have experience with this criteria. So bonds are, most people I assume know what bonds are, but they are loans. They're usually for either large capital projects or for refinancing existing debt, particularly in the building industry or the building sector. Refinancing is a very common type of bond that we see, and so that really plays into how the criteria and the certification process responds to the market. So the criteria are asset specific, but they are really around the use of proceeds for the bond. So we'll get into how that affects the characteristics of the criteria shortly. That bonds can be issued in local or foreign currency. They can be issued by a range of different entities: government, development bank, corporate, municipalities, and that we're really good at setting long-term goals and long-term objectives, particularly say if you're looking to align your company's portfolio with green reporting criteria or other sustainability initiatives. And then the green bond label simply, or the climate bonds label simply implies that the use of proceeds are allocated to nominated green or climate aligned assets. So we'll get into what that specifically means for the building sector shortly. So here's just an overview of some of the benefits. There's several benefits to issuers as well as investors. Issuers can ensure their investors that they've done their due diligence for green reporting criteria and be able to show that they are aware of changing policy landscapes and risks associated with this changing policy landscape. It strengthens the reputation of the issuer. And it also allows them to align with CSR, so a very quickly growing sector of the financial market. And then investor benefits are all over the place. There's, again, strengthening reputation. Investors will have a better understanding of what they're investing in, as well as be able to get a better sense of the risks associated with them from a climate perspective. And from sort of scale them based off of their, or be able to review them based off of their assets or their investments' carbon intensity. And then one other thing that we see is that green bonds trade at a premium in the secondary markets, and our CBI has recently released a document or report on what we're calling the greenium, where you can get more detail on how that manifests in the value of the bond. And so the goal of the criteria is to have be scientifically robust, transparent, consistent, and as simple as possible. We really want to scale this up for the market, and we understand that the financial market has limited data when it comes to the climate characteristics or the green characteristics of some of the assets. So part of the way that this criteria has been developed has been through a consultation with a technical working group, as well as an industry working group. And a technical working group reviews the latest scientific research on the sector, what folks like IEA and the IPCC are saying about what that sector needs to do to decarbonize or to be more sustainable. And then they generate, with CBI's help, generate a criteria and a background document that goes into the specifics of the rationale for the thresholds and metrics for the assets. From there, that background document and criteria document go to an industry working group, which really tests it for market readiness. So what are the limitations that they foresee, and can the TWG or can CBI proactively address those concerns and make it easier for the market to uptake. While today we'll be talking about the buildings criteria, there is also a range of other sector criteria, from water to transport to energy, as well as nature-based assets, forestry, agriculture, and we're developing for the grids as well as the waste management, and a slew of other things such as manufacturing is coming online. So we'll be looking at cement and steel as a potential way to provide another criteria for the market. So today, we'll be talking about the buildings criteria. The goal of the criteria is to transition the building assets and portfolios to net zero emission operations by 2050. So what that means is we are really trying to get a sense of where the market's performing, if it's performing differently in different regions, and what it will take to decarbonize that sector. And the rate of change is really our goal, is to understand how quickly do we need to change. We see that within the policy world, things are being improved at incremental levels or at large step levels, but we really want to have the scientific basis for what those percentage reductions need to be, or what the trajectory needs to be for that. So we'll get into more detail on that in a second. And so briefly, the criteria cover a range of building assets. They cover commercial assets, including office space, retail, hospitals, schools, universities, and most recently an airport facility, so not the airline, but the airport. Residential assets are also covered, so single family, multifamily, and mixed use. So any building that is solely dedicated to dwelling is what we consider residential assets. So rent-based assets or residential assets that are owned by for-profits are also considered residential assets, even though they have a commercial purpose. So that's one thing that we get a lot of questions on. And then the final one is public space, and this can be anything from streets, parks, public squares, and other non-building related projects or assets. And this is really helpful if you're looking at a campus or you're looking at a large collection of buildings. All the space in between can be assessed and included in the value of the bond if the performance of that space is also decarbonizing. And then the key feature of the criteria is a carbon intensity performance metric, which we have as kilograms of CO2 per meter squared. And that's for the base building energy performance, or actually correct myself. So for commercial buildings, it's the base building. So that's only the core services and excludes tenant spaces. And then for residential assets, that's all, that's the whole building. And so a little bit about the details of the criteria. There are emissions versus not energy metrics, and this is really important. This is a really important characteristic and distinction between our metrics and what we're seeing the policy world do. The emissions metrics are definitely coming online, but right now the sector does traditionally focus on energy, and what we see is that energy is highly variable. So there can be a highly carbon intensive energy forms and less carbon intensive energy forms. So by measuring emissions directly, we can focus in on the challenge at hand and be able to say with confidence that the bonds issued are decarbonizing. This doesn't mean that energy efficiency isn't an option, but it's one of many. So you have fuel switching, energy efficiency, and as well as looking at the grid. So yes, well, actually, maybe it'll be better if I explain this after. So the emissions metric covers scope 1 and 2, and we're looking at possibly expanding that into scope 3, which would include embedded emissions in building materials. As it does cover the operational energy and emissions associated with the building, this includes the grid or electricity emissions. So this is also another strategy that we're seeing is building owners switching from different energy providers and showing the verifier that that building's energy is solely coming from renewables. So that's another option that is being considered, or that can be certified. And then finally, as the grid condition. So what we're seeing in high carbon grids, we see a lot of energy efficiency because it makes sense to reduce carbon emissions by reducing the energy you're getting from the grid. And low carbon grid intensities such as Germany or France or California, for example, we're seeing a move away from energy efficiency and focusing really on on-site fuel switching and electrification. So this is really tackling the smaller portions of a building's emissions, but once energy efficiency has been achieved, then fuel switching is another option to reduce emissions. So we're not trying to eliminate energy efficiency as an option. We're trying to include all possible routes to decarbonize, which includes fuel switching, energy efficiency, and grid and sourcing of energy from the grid. So there's three options for certification for the buildings criteria. There's what we're calling a low carbon trajectory, percentage improvement, which is the upgrades route, and the third one is a proxy. So for this slide, this is the trajectory route, and this is a generic trajectory. Each trajectory is city or country specific based off of how what the data is saying. So if a country is performing as a whole similarly, then we benchmark the country. If there's a lot of variability between city and city, then we benchmark the city. This generic trajectory starts at, I believe it's at 90, and that represents the top 15% of the best performers in today's market from a carbon efficiency standpoint. Sorry, I think there's a typo here. It says energy efficiency, but that should say emissions intensity. And then the bond issuer then tracks or overlays their bond term on the trajectory, and that gives the carbon intensity target. So in this case, it's 65.19 kilograms of CO2 per meter squared. And that is that's the target for that bond issuance. And verifiers and issuers have a range of options for meeting that target. They could meet it all at once, so have decarbonized buildings today or high performance buildings today, and then buildings that are above the trajectory by the end of the bond term. But on average, if they intersect with the trajectory, then that is compliant with the criteria. Other options we've seen are term compliance, so starting off at a high carbon intensity and then really rapidly bringing them down, crossing at the midpoint, and then overperforming in the last 5 years. And so on average, again, that's that the average carbon intensity would be that 65 figure or whatever that particular country's target would be. That can be sculpted in different ways, but really it's about pulling together and aggregating assets and then and collectively bringing their emissions down, or rewarding those buildings that have already gone ahead and are outperforming the market. So there's a bit of additionality to it. There's a bit of just what we're calling green tagging. A lot of issuers already have a lot of green buildings and they want to distinguish them for investors. And so this is one way to do that, is to wrap them up and put them in a bond. And then, like I said, the ultimate goal is to get to zero carbon in 2050. We are also considering, and the IEA and the IPCC have talked about various criteria or goals for new construction versus existing buildings. Right now, this is for existing buildings and new construction, but going forward, phase 2 may include a different criteria set for new construction. What we're seeing is that the new construction sector is moving, our market is moving a lot quicker than the retrofit market, so the criteria can be more stringent and sort of lead the way for retrofits. So we have one example in Germany of a trajectory. This was used a local data set or a data set in Germany to what we're calling ground truthing, using the interpolation method. And the interpolation method uses where data doesn't exist, or large countrywide data or large citywide data doesn't exist. We've come up with a method where we can pull building performance information from one location, such as the ASHRAE data set, which is a global data set of various buildings in different climate regions, and then apply that to the market and add correction, or apply that to, say, in this case, Germany, and apply corrections to it to tailor it to that particular market. So that would include adjusting what the scope 2 split would be. So whether it's electric, whether it's more carbon intensive in its electricity or less carbon intensive in the electricity. And we're finding really good results with this method. There's a margin, an error of anything less than 10%. From using the ground truthing method, we go ahead and publish. So there'll be a theoretical baseline, and then on top of that, we will look at a local data set to see how closely that local data set is performing to the theoretical. It's a bit of detail, but that's behind the scenes. And with this process, any issuer or verifier looking to grow the market in Europe or elsewhere, definitely reach out to us, and we can help develop additional baselines and additional trajectories for emerging markets or for markets that have yet to be benchmarked. This map shows a list all the possible cities that can be benchmarked. Green represents solid data in low margin of error. Yellow, we need some sort of local data set just to double check that our calculation is correct. And then red is outside, so outside of this method's current scope. So we would need a different data set. And what we're seeing is that the colder the region, it's just the limit of our core data set, is that we don't have much on building performance in colder regions. So again, if you want to see a particular city develop, please reach out. And if you're someone who has a lot of access to data and think you have access to some colder regions, or even those in sort of Central Europe, let me know, and I will incorporate them into our calculations. It would be very helpful. So. And then so the second process is the upgrades route. This is a lot more straightforward than the trajectory, and this is just a flexible percentage improvement based off of the term of the bond. And our theory behind this, or theory of change behind this, is that the longer the term of the bond, the longer those assets are are locked in and going to back that green bond or that climate bond. So for shorter bonds, we're seeing we would like to see lower 30% decarbonization, where with longer term bonds up to 30 years, we want to see a really deep decarbonization of 50 or more. And this is to ensure that the percentage improvements are based off of the rate of change developed with the trajectory method. And yeah, so that one's relatively straightforward, and this can be done without a data set. So if you have a building today or have a portfolio today of buildings and you want to improve them, you can use this to just demonstrate where they were and where they're going to be, or where they were and where they've made it to. So it can either be term compliant, or it can be retroactive to show, hey, we've already taken a step, and we want to demonstrate to our investors that we've done this. And we saw this used in a French building, in a one-off building, and it had a 30 to 50% improvement. Relatively straightforward. It was one individual building, and was able to be verified and marketed as green. And then where data doesn't exist, we look at other third-party tools. So two international ones are the LEED standard and the EDGE standard. For LEED, we look for LEED Gold and Platinum, so LEED Gold and above, plus a 30% improvement against ASHRAE 90.1. And that ASHRAE 90.1 is the particular energy component of the LEED criteria. So it's really about the carbon performance of the building and less about the other green factors. So in general, LEED is a very good tool, and we definitely do support it. Our mission at Climate Bonds is to specifically target the energy and carbon associated with the building. So hopefully buildings that are using our method are also looking at LEED and using all the holistic view of sustainability and green to define their buildings and to improve their either new constructions or older buildings. In the developing in emerging markets, we see that EDGE is a really popular tool from the IFC. And what distinguishes EDGE from a lot of other criteria or a lot of other standards out there is that it does include a specific 20% reduction in emissions intensity. And that's really the only one we're seeing that is focusing specifically on emissions and not indirectly through energy efficiency. We do also include other standards at the country level that look at energy, but in those cases, we're able to see that energy efficiency in this particular in that particular market will have a substantial emissions reduction. So this is the case for building codes in Australia, as well as the EPC ratings in Europe. And we can go into more detail about that shortly. And then the first issuance of a proxy, or one of the first issuances of a proxy, was the UK's Barclays issuance of 500 million. This was a really successful issuance and really paved the way for the UK market in terms of pulling the market forward. What we saw is the EPCs are implemented differently in each country, and have general guidelines from the EC, but the UK was able to implement both an EPC rating as well as what they call an environmental impact rating. And the environmental impact rating is a direct carbon metric. So while other countries we've been able to leverage the EPC rating, such as in the Netherlands, in the UK, we could go directly to the emissions with the with the environmental impact rating. And this, we worked with Barclays and the Carbon Trust to lobby the government to release this information and make it public so that banks and other asset owners and investors can really see how the market's performing and start pulling targeting the low-hanging fruit or rewarding the high performers, and that market is definitely kicking off. A similar case in the Netherlands, and they have the Netherlands is an interesting case because they have a map of all of the EPC ratings, and a verifier or issuer can go online today, type in the address of their building, and get their EPC rating, and they can do that for all buildings in the Netherlands. So that's really good if you're looking for buildings to add to their portfolio and looking for new assets to incorporate into your into the portfolio and acquire, or if you're looking just to tag your existing assets. And that one was done by Occam. And then, like I said, we got to this briefly, but how it applies to the portfolio, it can either be aggregated, or it can be based off of individual asset. For the trajectory and the upgrades route, we allow for aggregation of all the assets. So you can have high-performing assets and low-performing assets, and on average, the performance is what is assessed. So this can help. So good-performing buildings can help pull poor-performing buildings and raise the value of the bond issuance. And then the second one, proxies. This one, unfortunately, because it is not a direct emissions or energy calculation, they have a limit that each building included in the portfolio has to meet the proxy. And if there's a mix, so say you have German assets and Australian assets, then you can use a proxy for Australia and a trajectory for Germany and mix that portfolio together. And happy to explain that more, either with follow-up calls or, there's also some additional explanation of this process on the website under the Methodologies tab. And so as part of this process, and with the help of Climate Kick, we have published a background paper which goes through all of the rationale and the latest science for why we did what we did, and why the TWG chose the thresholds and the approach it did. So anyone looking for more detail, please definitely read that, and I'm happy to answer any of your questions. It definitely goes into depth, something like 40 pages, and I helped write it, so I think it's a good read. And then the other things that we have released is the eligible residential and eligible commercial brochures. And these are country-specific brochures directly talking about the proxies and trajectories associated with that country for that particular building subsector. So if you have residential buildings in Germany, there's a brochure for you. If you have commercial buildings in the UK, there's a brochure for you, walking you through the steps and making it really easy to issue a bond. So this is hopefully is really helpful. I know that they have become quite popular with our verifiers and issuers. So that is just a brief overview of their criteria, or a long overview of their criteria. If I missed anything, please in the question and answer section let me know, and I'm happy to answer your questions, as well as I believe everyone has my email, so please feel free to email me with additional questions if they come up. And then I will pass it over to Carmen, who will go through the questions and successes with the certification process.
Hello, everyone. So this is Carmen. I work on actually how to get the bond certified. And for the remainder of this webinar, we'll talk about the process of getting your bond certified. So quickly, just have a quick overview of the number of certified bonds we have so far. Since we started doing this, we have 122 certified bonds. That's for all sectors, not just buildings. And out of that, about a third have involved low carbon buildings. About 20% of that is what we call pure play. So they are only for buildings, low carbon buildings bonds. And so low carbon buildings is an important part of our standard and out of our sectors, and therefore, it's very important. So how do we how do we certify bonds? So first of all, our climate bond standard is based on is partly based on the IGMA green bond principles. Right now, we are using the climate bond standard version 2.1, which came out at the end of 2016, and it's based around 4 main concepts or principles. This is the use of proceeds, how the issuer decides what to spend the proceeds on, how the issuer manages those proceeds, and the reporting that the issuer provides to the market. And then here on the next slide is a diagram about basically how the flow chart and the process of a certification. I won't go into in detail, but with buildings criteria, because the buildings criteria is a bit more complicated and it's quite specific on each building and whether it meets the thresholds of that place, usually we get inquiries from the verifier or the issuer about their proposed projects before they get to the rest of the process and actually go through the verification. So compared to some of our other criteria, we get inquiries about the projects early on. And we work with the issuer or the verifier to make sure it does meet our thresholds before we go through the process. Now let's go through the process itself. In order for us to award and confirm certification, we require 3 documents from the verifier or issuer. These are the 3 documents. We have an information form, which is a quick overview of everything about the bond. Then the issuer will engage a verifier to conduct verification and produce a report, which I'll go into a bit more detail in a bit. And then the issuer will need to fill in our certification agreement and sign it and send it to us. And once we have all 3 documents, then we will review everything. And if, as I said, if the buildings are already eligible that we have decided before, then we can quite quickly confirm certification, as usually within just 1 or 2 days. The exception is if we have new verifiers, if we just approve the new verifier, just so that in order we can check how they have conducted the verification, we will need to spend a little bit more time on that. And typically we aim to do those within about 10 working days. But generally we try to be as efficient and quick as possible because some issuers have quite tight deadlines. So what is certification about? Certification is to check that the issuer meets the requirements of the standard. And the standard is available on the website and everyone can look at that if they haven't yet. And it involves looking at the internal procedures inside the bond insurer, seeing that they have a plan for how they will spend the proceeds, seeing that they know what they're talking about with regards to the buildings that they want to spend the proceeds on, and seeing that they have a reporting framework during the term of the bond after the bond has been issued, that they have plans for how they will report to the market on the bond. This certification is divided into 2 steps. The pre and post verification and pre-issuance verification is what happens before the bond is issued, and post-issuance verification is what happens after the bond is issued. Yeah. So we don't look at the bond and provide issuance ourselves. We have around 30 companies at the moment, which we call our verifiers, who conduct their verifications. These are third-party companies who have applied to us, and we have gone through the verifiers' details and screened them to make sure that they're all qualified and have the relevant technical expertise in buildings and our other sectors, and have experience in assurance and debt capital markets in order to understand these green bonds and do the actual verification work. So there is a so these verifiers are the ones who do the verification work. They all have to conduct these verifications using the same assurance protocol, which is ISAE 3000. Typically, the issuer who wants to issue a green bond and receive our certification will approach one of the verifiers on our list, which is on our website. They will approach our verifiers, ask them to help them structure their green bond, look at their green bond, provide verification, produce the report, send us the report. We will review the report. We will review the other materials, and then if everything checks out, we will provide the certification. So that's the overall process. So what does the verifier do? The verifier will follow our guidelines, and every verifier has to use the same procedures roughly, but we have a range of verifiers spread across the world, big and small, in different markets with different experience, different expertise, so that different types and sizes of issuers can choose which verifier is most appropriate for their needs. Now, what the verifier does in the pre-issuance certification is focus on helping the issuer structure their green bond. We are very strongly encouraging the issuer now to create this green bond framework, which is more widely used in the market. And this will help them understand the benefits of issuing a green bond in the first place for first-time green bond issuers. And even if they're a bit more familiar with the process, just help them understand our certification requirements. Then the verifier will work with the issuer to make sure that they have a process in place to add the eligible projects and assets as required and track the funds. What does the verifier and issuer do after issuance? After the bond has been issued, the verifier will again work with the issuer to conduct post-issuance verification, and this must be done soon after the bond is issued. After the bond is issued, the issuer has the money now, has the funds and the proceeds, so the verifier will check that the issuer is managing, and if the issuer has allocated any proceeds yet. So there's a bit of a difference before and after the issuance in terms of what the verifier does. And it's only after we've checked the verification of the bond after it's been issued, then we award post-issuance certification, and then that's when we say like both pre and post-issuance certification has been awarded, and then the whole bond is actually kind of receives our certification. So it's very important to note that our certification is a two-step process, both before and after the issuance, and we're the only scheme on green bonds that has the second phase, which is very important and highly valued by bond investors. Now, just a quick note about how the proceeds are managed by issuers, because we get this a lot. So typically before the bond is issued, the issuer will have some plan or statement about how they plan to use the proceeds. It'll be best, obviously, if the issuer was able to allocate proceeds right away within a day if the bond is issued, but that's not realistic. And so we have a 24-month deadline or time frame for the proceeds to be allocated. And within those 24 months, if the proceeds have not been allocated yet, they have to either ring fence or earmark those funds as appropriate. Now, the issuer is free to do either method. We just require the post-issuance verification to double check and provide assurance that this procedure and step has been conducted properly. And also, if that money hasn't been allocated to those buildings yet, then they can be temporarily invested in simple financial instruments, which is a list included in our standard. And these instruments obviously cannot be they cannot be in high carbon investments or anything, but they're temporary, and usually it's just cash or some other very low risk financial instruments. And then after the both pre and post issuance certification has been awarded, throughout the term of the bond, we require the issuer to regularly provide updates or reports on the bond. This has to be done throughout the term of the bond. So even if it's a 30-year bond, we require the issuer to continue providing updates and reports through 30 years to 2048 or whenever. This report will have to be provided to us and the bondholder as a minimum, but we strongly recommend them also release this report publicly. This report will at least contain basic details about what have the proceeds been allocated to and the buildings, and if within the first 24 months, how much of the proceeds have not been allocated yet. And then some final notes. So right now, since December 2016, we have been using what we call the Climate Bond Standard version 2.1. We have been working this year on the version 3.0, which has some updates catering for some requirements that the market is very interested in. Version 3.0 will be released very, very soon. We'll be sending them out to our verifiers in some of our close network very shortly, and to the wider market soon after that. So if you're one of our close network, you'll be seeing that soon. You might also have come across what we call a programmatic certification, which is a streamlined process for bigger bond issuers who have large portfolios of buildings and other green assets who want to issue multiple certified bonds. That's a streamlined process whereby they can certify a whole load of green projects or buildings in one go and then issue bonds if and when they like. And also, we can talk about programmatic certification later in another time. And also, finally, we are also expanding our certification to beyond just bonds. We have certified a few loans this past year, but our standard already involves other debt instruments, and our version 3.0 will very directly mention other financial debt instruments too. So look forward to including more into the certification space. So that's all for me for now, and we're going to move to the Q&A session now. Thank you.
Thanks, Carmen and Corey. So just a reminder, we've had a few questions coming through, but just a reminder to everyone, you should be able to find the Q&A panel either at the bottom of your screen or on the right-hand side. So put your questions in there, and we have about just under 15 minutes to tackle questions. So we should be able to get through a few. First question, where can I find the greenium materials you mentioned? So Corey, I think that's something you mentioned.
Yep, yeah, so that's on our website. I'm happy to send a link. Katie, do you know where on the website? Would it be under the markets tab?
Yeah, all of the reports on that we publish go under the resources tab, which is on our website. So there's pricing papers. The pricing papers which talk about the greenium are all under that tab, and I think there's 3 or 4 pricing papers because we publish them periodically. So I think last year we were publishing them quarterly. This year we will be publishing them half yearly. So yeah, there's several on there. If you go to resources tab and then reports, they're all under there. Okay, next question. Just finding the next question. Okay. How is market integrity ensured in the green bond market? So for Corey or Carmen.
Yep. So there's a range of options for improving the market integrity. ICMA has a second-party verification process that they use. Ours is third-party verification. Our markets team also has their own set of criteria for assets that they include in their market analysis and state of the markets report. So there are several organizations that are looking at and being very diligent about what's in the market versus what is not in the market. While it is a new sort of nascent market, there are several options to ensure investors that this process has been done. So if you are an investor, I would incentivize looking for and understanding third-party vetted standards as a way to ensure that the criteria are meeting your investment needs.
Thanks, Corey. How readily available is carbon data of residential properties? In the UK/EU, there are EPCs, but how about elsewhere?
Yeah, so carbon data is a little challenging to find. While there's different ways that it is made public. So, for example, in the UK or in the US, the EIA or the EPA collects it under Energy Star and Portfolio Manager. They do quarterly and yearly reports on the state of the building sector and how different buildings are performing. Most of that information is aggregated up to a very high level, so it's hard to disaggregate and use as benchmarking, but we are working with them to dig into the data a little bit more and see if we can start setting local benchmarks. Again, in the U.S., there are several cities that have taken the initiative to collect and make transparent their buildings' energy and emissions information. So New York's local law, I think it's 84, made that available back. It's been a few years now. LA has a data set. San Francisco has a data set. Seattle has a data set. And we've used several of them in the U.S. to create benchmarks. The EPCs are an interesting story, particularly in the European context. We're seeing other countries actually mimic the EPC process, the EPC methodology. But what we're finding is that the European Commission's recommendations for countries is robust, but they're just that, they're just recommendations. So how the country actually implements the EPC program is highly variable. The data is public or it's not. There's privacy concerns, and it really it comes down to how much the policy world in that particular country pushes for that information to be made public. In theory, all building audits should be taking into account the energy use, which is definitely standardized from during the auditing process to the best it can at this point. That is moving forward as well. But they also collect in these EPCs. They collect the fuel split. So how much electricity, how much natural gas, any heating oil, and those are in the data sets. It's just about unlocking that and doing the actual analysis to figure out what that means in terms of carbon. So the data is there, it's out there. It's about making partnerships, making the case to policymakers and to the community why it's so critical that this information is made public, so that we can meet our Paris Climate Agreement goals and the goals of the 1.5 degrees for this sector.
Great, thank you, Corey. Have there been any bonds certified using EDGE already?
There have been, mostly in China, and I think we have a few that are looking to use it in India. It's definitely a growing certification tool. and is one of our most straightforward process. It's just about tagging the asset. What we're seeing with Edge is that it isn't the total issuances aren't that high, total certifications aren't that high, so they don't make up a large portfolio within one particular issuer's portfolio. So that is one of the limiting factors with Edge. But as a mixed portfolio approach, Edge can be used, and it does increase the total value of the bond issuance.
Okay, two questions kind of on the development of the buildings criteria. Who was involved in the development of this criteria, and will the buildings criteria change? How does it develop in the future?
Sorry,
so who was involved in the development of the criteria, and then will the buildings criteria change in the future?
Yeah, so there's several people involved. Shay Wall is our lead. He was a previous member of the World Green Building Council, and we have a range of people. John Dulac from the IEA was crucial in helping guide the process. This was the buildings criteria is really one of our early criteria. So it's about due for a renovation. We do look at reviewing them. We're currently in the process of reviewing the buildings criteria and like I said earlier, adding the new construction criteria. So there'll be two different targets, one for new construction and then one for retrofits in existing buildings. We've also looked at possibly streamlining the language and the methodologies behind establishing trajectories, establishing baselines, so that we can work with issuers and work with other parties and consultants to help share the workload of benchmarking these countries. Definitely, we're a small nonprofit, and we have a whole team of people that are very active in this space. But the more that can get involved, the quicker we can grow this process. So yeah, that's the process. Yeah.
Thanks, Corey. And then this question is probably a bit more for Carmen. What does the verifier have to do after the bond is issued?
So it's really important that the issuer remembers or notes that after the bond is issued, there's still the post-issuance certification. So unlike some of the other schemes out there about green bonds, in our certification, the verifier comes in again, works with the issuer, looks at the issuer's documents to make sure that everything is meeting our standard, and conducts post-issuance verification. After that, when the issuer does annual reporting, the issuer doesn't need to engage the verifier anymore. But in the past, we have some issuers who are willing to go beyond that step and provide more reassurance to the market. And so some issuers do engage the verifier once every year to look at their bond again. But yeah, after the post-issuance certification, that's generally done.
Great, thank you. That actually brings us to the end of the question. So unless anyone can get another question in the next sort of 30 seconds, we're going to finish up here. So just want to say a big thank you to Corey and Carmen for talking us through that. I hope everyone found it interesting. And just as a reminder, we've recorded this session and we will be putting it online shortly, and we'll share the link around with everyone who's registered. So yeah, thanks again for attending, and we hope you found it an interesting session. Have a good day.